Hello and welcome. In this lesson, we are going to continue our journey with capital gains tax. A little bit of stuff is left in capital gains tax, so we'll look at that. One last relief left as far as our capital gains tax is concerned. So just one last relief, which is our gift relief. Now, as you can see on your screen, okay, I've shared the screen with you. That is our gift relief on page 42. Now, gift relief is a relief when you sell an asset to a person who is your relative or a friend. Then obviously you would appreciate the fact that if you're giving it to your friend or a family member, then you will not give it at the market price. So you are definitely going to give it at less than market price. So when something like this happens, if you are giving it less than market price, or you are giving it as a gift, a free gift without charging anything, then you will just take the sales proceeds as market value. So you will take the sales proceeds as market value, even you are charging nothing, or even you are charging less than market value. All right. Now on that gift, relief might be claimed, and that relief is called gift relief. Now, as you can see on your screen, it says gift relief on gift of business assets and share of personal company. Now it says transfer and transferee. Now who is transferor, who is gifting it? So we'll take the sales, which is as market value, and we'll deduct the cost. After deducting the cost, the amount received in excess of cost. So when you are giving the gift, then you are charging less than market price. Now, although you are charging less than market price, but you might be charging more than what you have actually paid for it. So if you're charging more than what you have paid for it, you're charging more than cost, then that amount will be immediately chargeable, and the remaining amount will be held over, and that would be our gift relief. Now, as far as transferee is concerned, when the transferee would sell that asset, what would happen? We'll take the sales and we will calculate the base cost. Now, when we will calculate the base cost, in the base cost we'll take the cost, which would be selling price of the transferor. So we'll take the market price, market value, and we will deduct the gift relief out of this, and the remaining amount is going to be our chargeable gain. All right. Now there is an example on this one. If you just move to the next screen, this is a question on the next screen. As you can see, it is a question of gift relief. It says, now if you could just pause the video and try to solve this question. All right. Now I assume that you have done it. If we just look at the question, it says on 6th May 2015, Angelo sold to his son Michael a freehold shop valued at £200,000 for £50,000. So although its value was £200,000, he has sold it for £50,000, which is very, very less than market value. And it says, and claimed gift relief. Now, and he's claimed gift relief as well. Angelo had originally bought the shop, for which he had run for his business, for £30,000. Now, he actually bought for £30,000. So how much he has charged more than what he has paid for it? He has charged £20,000 more what he has actually paid for it. So we'll take the sales proceeds first. So how much he has sold it for? He has sold it for £200,000. All right. So we'll just take the sales proceeds first. As you can see in the answers, we'll take the sales proceeds, which is market value, because he has given it as a gift. Then we will deduct the cost out of it, and how much he has paid for it, where he has paid £30,000. Now the remaining one is going to be our gain. Now how much he has charged more than what he has paid for it, that would be immediately chargeable, which is £20,000. That would be immediately chargeable. That is chargeable gain. And the remaining amount, which is £150,000, that would be deferred, and that would be paid. Deferred until Michael is going to sell the property. Now, if you come to from the Michael's perspective, it says in the question that he has sold it for £195,000. If he has sold for £190,000, we will deduct the cost out of it. How much he has paid for it? £50,000. So we'll deduct the cost out of it. That is our remaining gain. All right. Now, why we deducted the cost of £50,000 as you can see, the cost was actually £200,000, which was market value, but we have deducted £150,000 out of it, which was our deferred gain. So we will deduct the deferred gain out of the cost. Our base cost is going to be £50,000, and likewise our gain is going to be £145,000. All right. Now this was just an example of gift relief, and we have almost finished, and we actually has finished the capital gains tax. Now the only thing is left is self-assessment things, which is just a theory. Now from page number 45 to page number 59, I think it is a self-study. Please make sure you read it, not just till page 50, right? It is just a self-study. Please make sure you read it, but you just have to just read it and remember it, because I cannot feed it in your mind anyway, so you will have to read it yourself. All right, that is end of our this lecture, and I will see you in the next lecture with the inheritance tax, and that is our end of second section, which is capital gains tax. In the next lecture we will start our third topic, which is inheritance tax. Till then, goodbye.